We're getting all set up here on the, I used to say trading floor, but because of the pandemic, we can't say trading floor. Saul Shaul is your host and mentor. He is actively scalping the market for his own account. Okay, that's very important for individuals to know. So he's got his money where his mouth is. He is focused on trading the S&P 500 E-mini and will be doing so this morning. He is looking, now what I'm describing to you about Saul is what this service is about and what the opportunity for you is when it comes to trading your own account, in our humble opinion, having a better shot at developing consistent profitability and being a talent, a trained talent in your trading account and your trading business, or with your trading account in your trading business. So think about that for a second. You have your own software on your own screen. You have your own data, you have your own order entry, and you have your own charts. And you are sitting in front of your computer and you are looking to activate those services to your own benefit or to your benefit and make money after commissions, seat fee, your time, to make it worthwhile. That could be a couple $100 a day. That could be more, depending on what you're looking for and how good you are in trading. And what's nice about the S&P 500 E-mini is that you can get good at it with one contract and simulation against real-time data, which everybody should start with. Then as you get good at it, utilizing this trading technique, this price action trading strategy, then you raise your contract size. And when you raise your contract size, you have the ability to increase. Now you're increasing your risk profile, but you're also increasing the opportunity based on the entries, exits, and stops in that particular trade, which really is why individuals like trading the S&P 500 E-mini, because it gives them leverage to leverage up their talent and be able to make money when the market is going up and when the market is going down. And it's a representative of a basket of 500 stocks. So those that are new, if you need trading software, let us know. And that's very important. You want to have good software that you can trade on. You want to have a good connection to the internet. And you want to be able to understand your order entry, understand your charting, and understand how to place stops and know what that means based on the risk of trading, and practice it until you get comfortable enough to trade with real money. So there's an everyday opportunity here. It is a service, okay? The service will send out an opportunity for you to sign up for. If you don't get it, ask, okay? You come in as a guest. You jump right into being a signed up member and part of the family, and then you take it from there. If you're coming in from the outside, join us on the inside. Look for the link. So that's right. Saul was on the trading floor in Chicago for many moons. He's been trading for 25 years. He is actively scalping himself now, utilizing this proprietary scalping technique, his and his proprietary scalping levels, his levels. He has a particular way of setting them that he believes he gets an advantage in his own trading. And when you're part of this service, he gives you out the levels on a daily basis. He gives them out right around the cash open when he sets them. He's going to jump in pretty soon and he's going to take over from me and he is going to give out those levels. Write them down. It's going to consist of a pivot, a price, and other particular prices, individual prices on top and bottom of that pivot. So think about that. You're getting a 25-year veteran's proprietary scalping levels that we think, and you may come to think pretty quickly, is a trading advantage over other traders based on these levels. So that is the first level of opportunity based on these services. Track them on a daily basis, learn to load them in your software, ask questions, interact with Saul, pay attention to what he's saying, particularly at his levels. So pay attention to price movement and the interaction around that price and what's happening in the market and how that relates to today's trade. And the point here is, how do you come to your screens, be set up for today's trade or get set up for today's trade, do it on your own, and the difference between and I'm going to use an analogy, right? See a lot of people at the gambling tables in various casinos around the world. A very small percentage of those people know what they're doing, and they're able to walk away from the table with money in their pocket, whereas everybody else is providing that money. And that's the difference between being a schooled trader and an experienced trader. And that's what Saul looks to help you with, is to bridge the gap from where you are to being a seasoned, well-oiled trader and making money for yourself. And you don't really care if other people are losing money because they're giving you the money. Trading is a zero. It's hard to say, but trading is a zero-sum game. For you to make money, you got to take it from somebody else based on the fact they don't know what they're doing or they are not good at their trading. So depends on what you're doing. So the question is, how much time should I be present every day? First 2 hours, pretty important here. So right now we're coming up to 9:24. If you came in at 9:15, you were set up and ready to go. You receive Saul's levels. You load them into your software. The bell is very important at 9:30. We're talking Eastern time. The bell is very important. Bell goes off, action comes into the marketplace, volume, momentum, follow through. The price change happens, and then it's a matter of doing a trade around Saul's pivot. But I guess the first stage here is knowing what you're doing, knowing how to handle your order execution, knowing how to defend yourself based on your stops, paying attention to what's happening in and around Saul's levels, and trading in simulation only until you get really good at it before you risk your money. Like, you wouldn't do brain surgery until somebody taught you brain surgery, right? And then you actually practiced it, and then you would do it with guidance. I mean, your money is sacred. Hold on to your money until you're ready to do it. And then step in and see how you do, and then step out, ask questions, interact, and that's where Saul's mentoring comes in. So you're joining the family based on signing up for this stuff, and then what happens? You can graduate into. He's got great prices on his course and his mentoring, or if anybody is interested in it, we could talk about it privately, but you have to be part of the family first. So take the time to do that. If you're not, yeah, you can raise your hand. Raise your hand and I'll send it to you. It's a good idea. If you're not part of it, you want to be part of the family, raise your hand. Never thought of that before. David, that was a very good move.
All right. Good morning, everyone. Can everybody hear me all right? All right. Fantastic. Let's give you our levels for this morning, and we'll see where the market takes us. Our pivot this morning is 37.40. 37.40. The resistance above at 51, 60, 69, 76. Support below 30, 21, 14, 07, 36.99. Pivot 40, support at 30, 21, 14, 07, 36.99. Resistance on the upside at 51, 60, 69, and 76. Market opened up here. It's a little bit higher as the market seems to shrug off Friday sell off. It was all over the place on Friday, especially that last hour or so, which was again not something that we like to trade. We focus more on the morning hours to give us good opportunities. We had good ample opportunities on Friday for us to trade. If you were with us, we were able to take advantage of those opportunities as the market presented them. Let me see. Yeah, we'll post the levels here in a minute. There they are. They're posted in the chat box area for those of you who want to see them written down instead of writing them down or putting them in your. But yeah, I mean, they're good to write down because the levels seem to repeat themselves. If you ever go back and follow up on opportunities, you can see that how levels seem to always come back, and that makes sense actually. But that's for another story. That's for another day. Anyway, yeah. So Friday was. We focus more on the morning hours for us to take advantage of the opportunities that we have. Market trades a little bit buoyant with in the morning hours versus the afternoon, where it seems to be more one-sided and doesn't really give us the trade is just different in the afternoon. So somebody asked earlier about when's the best time to trade, and it probably, I would say, the morning hours, first 2-3 hours of the day versus kind of the rest of the late afternoon for sure. Definitely not the last hour, that's for sure, because it gets a little bit goofy that last hour. And the only reason that we tell you to watch out about these times is because one of our considerations as to when you put on a trade is when to put on a trade. We put together a trading methodology that encompasses a whole bunch of qualitative, subjective decisions that you as an individual trader has to make in regards to, do I take this trade or don't I? What we're trying to do here is present to you different options, different opportunities, different setups, and you have to make those decisions on your own as to whether you're going to be able to participate in that setup or not, based on the fact that you recognize the setup and understand why it's happening, and then know how to get into it and exit it. Those are criteria that we talk about in our education course. And the goal of the course is to let you become an independent trader. That's what we're trying to achieve here, where you don't need me even, or you don't need anybody. You can just take the information that's given to you every morning and trade according to what the market tells us, the price action opportunities. We don't believe markets go straight up or straight down. So consequently, we have these inflection points. So we believe the market will give us an opportunity to make 2 to 3 points on our trades. Basically, what we're doing here is we're scalping the market, waiting for those opportunities to present themselves, and then taking advantage of it as the markets trade during the course of a day. Sometimes those opportunities are plentiful. Friday, we were very busy all morning. And other times they're scarce. And well, like I said, we don't know when those opportunities are going to present themselves. All we can do is trade and have good reasons to trade, and let the chips fall where they may, and trade around those opportunities. Trade it. We had a nice little quick dip here down to our 40 pivot. If you were a little aggressive, maybe you bought some and lined up with our blue band as well. It doesn't mean that you buy them every time. It just means that you have to know when to buy that pivot initially and when not to. Those are all the things that we discuss and talk about in our education course. Remember, the goal is for you to become an independent trader. All right. So anybody have any questions, please feel free to ask. We are trading in a little bit of a range here overnight, at least the last few hours. We were all over the place, as you can tell here by the, well, we rallied, but then we've been in a tight little range for the last few hours. Nothing much has been going on as far as trading is concerned. Once Europe opened up, the market became a little bit more active and then came up here and just kind of hung here for a bit. So we shall see. A lot of goofy things going on around the world. They got Russia is having these, big protests going on there. We're trying to get the government to pass a stimulus or come up with a number. The market is looking towards that as a idea here as to what might happen, what might not happen. There's a lot of pushback against the number by some Republicans, and so that number is being kind of trying to get diminished, but Biden says that he wants to stick with it. So we shall see what comes out of it. And the market's a little concerned about what that number is. Obviously, it likes a bigger number for obvious reasons. And it'll, it fits in with some of the Fed's desires, if that's the right thing. So we'll see what happens on that front. But one thing at a time, and this is why we're here trading. We never understand. We don't know how markets react to certain news. We all can do is trade the news. Speaking of a certain news that comes out, let me see if there's anything coming out this morning during our time. Yes, we have ISM Manufacturing Index coming out here at the top of the hour at 9 o'clock, along with construction spending. So a couple fundamental news to be that we have to concern ourselves with that will be coming out here at the top of the hour at 9 o'clock. So we don't like to trade numbers. It's not what we like to do. We like to kind of let the number come out in the market and then let the market absorb the number, whether it be a market mover or not, we don't know, and then trade it accordingly. So we bounced here a couple times off of our pivot here. Pivot is held very nicely. For you pivot players, aggressive players, a little bit if you're taking it. Again, you have to be, everybody's got different risk tolerances. Everybody doesn't trade the same. Everybody asks me, "Oh, how well do you do? How well you don't do?" It's not about me. It's about you as an independent trader. You make the decision on your own as to whether you're going to take the trade. My job here is to let you understand the risk involved, and then you have to make the decision as to whether you should take the trade or not. The number, it's very hard for somebody to mimic somebody else's trading capacity or ability, and that's not what we're trying to do here. I cannot do what some of the great traders I've been standing around with in the pits were doing, and some people cannot do what I do, and I cannot do what somebody else does. You are you. So keep that in mind, right? I think that question, when it's asked to me, is a ridiculous question. I don't understand. If you've been trading in this business for a while, you know that there's many different ways of making money, as well as losing money, and we're trying to keep those opportunities of losing money away from you so that you have a better chance of making money. What is the best way to enter the market at these levels, even the numbers or quarters? That's a good question. We scale into a position. We depends on the risk tolerance of each individual. If you're trading one lot, maybe you just get in at the exact number. If you're trading multiple contracts, maybe you scale in. Depending on volatility, maybe you're scaling in a point above and below the level. Maybe you're scaling in a half a point above and below the level. It all depends on the volatility on any given day. Right now, with things have quieted down here a little bit, probably I would say a half a point above and below a level probably be suitable. If you're a little bit more aggressive, maybe you're doing a point and a half above and below a point, and then maybe 3/4. Everybody's a little bit different. You just have to scale in according to how much risk you want to take. I think a point minimal. I would not do more. Yeah, a point about above and below level would probably be suffice, at least at this point. We get a little bit more crazier or get some more activity in the market, maybe it'll be a point and a half, 2 points. Again, then obviously if it gets to that point, you're also extending your stops a little bit because you have to, right? So that is all comes into play according to the activity of a certain day. Can we repeat the levels in the chat box area or reprint them? That'd be nice. And there they are. There are the levels in the chat box area for you. Those of you who might have missed the levels verbally, we've printed them up in the chat box area. If you just open up your chat box, and actually that is a way for you to communicate with me. Just put your question in the chat box area, and I'll gladly answer the question for you. As the market redrifts back down here to our blue band, again, our pivot blue band area, we don't like to take. It's a lot more riskier. Second, third time, fourth time back to a level. So I'd be able to tread a little lightly if you're going to trade. If you're going to do trade smaller, and try to take advantage of this area that seems to be holding here. Again, everybody's different, but every time you go and retest a certain area, becomes a little bit more riskier. The number of times you go back or up to it, back down or up to it. So keep that in mind if you're trading it. Seems to be working right now pretty good. If you are trading it, just keep a stop in there, and then that way you can don't get. You've obviously made a few ticks off of that bounce off of this blue band 30-40 level very nicely here. So let's see what it wants to do. The market moving powers of amateur traders are continuing into the new week as the Reddit crowd turns their sights on silver after pumping up shares of GameStop and other heavily shorted stocks. COMEX silver prices are up 11% overnight. Huh. That's nice. The highest level since mid-August, following a 6% jump last week that boosted silver mining firms. On Friday, almost $1 billion already flowed into iShare Trust, Silver Trust, and the world's largest ETF backed by silver, according to a fund sponsored BlackRock. The U.S. bullion broker AMMEX has also disclosed a 1 to 3 day delay in processing silver transactions, while money, metals, and SD bullion warned of unprecedented demand. Some of Wall Street's were already positive on silver outlook as part of the broad upswing in raw materials. Goldman Sachs called last week for $30 announced price target. Others, like analysts, Commerce Bank said the latest retail frenzy not lasting all that long. All right, nice trade there, Robert. I'm glad you took some profits. You seem to sometimes not want to take your profits when the market gives it to you, but I'm glad you did take them today. The squeeze here is aimed at banks by forcing physical delivery of silver into vaults. Silver Trust ETF is backed by physical silver, meaning that the precious metal needs to be purchased with new investments when new investments are received. However, retail traders may find it harder to influence silver prices compared to a single stock, given the larger off-exchange market for the precious metal in which banks trade on behalf of their clients. The Hunt brothers tried to do the same thing. The Hunt brothers attempted to corner the silver market by buying up 1/3 of the entire world supply. Other than that held by the governments. Within a year, the prices of silver jumped 731% to a record high $49.45 an ounce, and later collapsed in an event called Silver Thursday. COMEX adopted the Silver Rule 7, which placed leverage restrictions on purchase of commodities on margin, and the Hunt brothers had to borrow heavily to finance their purchases. Yes, I do remember that interesting opportunity, or they tried to. I guess you're talking about these traders. Now, the Hunt brothers were actually seasoned traders. They were been around for a while. They've been trading in the market for a while. They actually understood the risk. I think a lot of these people who are trading on Robinhood and these apps that are coming up, just I mean, I have a feeling that they don't quite understand the risk involved here, and what's going on around these opportunities that they're complaining about, that they're not being able to free trade. It's I'm afraid what's going to happen is that these opportunities are going to present themselves, and they think that it's like so easy to make hundreds of dollars on a $10 stock, and except for one day when it's not. And that day when it's not, they lose a whole bunch of money, and then they're never going to trade again. Then they're going to say the game is rigged. Well, unfortunately, the stock is worth $20 at most. It's trading at 400, and they think it's okay to buy a stock that's trading at 400, and then they wonder why they're going to lose money on the trade. So I think there's these people who are yelling and screaming about being able to trade as much as they want at whatever stock they want, and and they're new people are trading, which is great. I think that's fantastic. But by the same token, they're getting swayed by these people who are trying to hurt other people. That's all that is. It's all that's going on here is one group of people hurting another group of people. That's my take on it, and I fear that it's going to be a detriment at the end of the day, because when things do settle down here a little bit, things will not be okay. The pivot is 37.40. How I trade it is at the buy level. Well, it was initially a couple times there on those dips off of the morning. So there were a couple opportunities to buy them there. I kept warning you against buying them the second or third or fourth time back to it. So you have to kind of listen to what I'm kind of saying. I said that it was a buy there a couple times, and then it became a lot more risky every time it retested the 40. So I wouldn't have bought them the last few times back down there. Some of our traders made some money on those rotations off of the 40 early on when it came back down a couple times. But then when I said it came back down there 3 or 4 times, I said it's a lot more risky. So you got to kind of listen into what I'm saying here to help you stay out of the, to understand the risk. That's all I'm trying to do is help you understand the risk. As the market continues to downtick here, coming down to the 30 area. So that's what we're trying to do here. We're trying to help you understand when you take the trades and then when not to. That's just as important as when you take the trade. I would have to assume that is the case, right? All right, market, a little bit of pressure here coming down here. We got a little support here at 30. If you got any questions, please feel free to ask them in the chat box area. That's what we're here to do, is to answer questions that you might have in regards to our trading, what we're looking for, how we're trying to enter trades, how we get out. We talked about scaling in already. We talked about taking profits, talked about when to trade our pivot, when not to trade our pivot. So we do have, all right, that was a nice quick opportunity there. If you got in there at the 30.5 area, yeah, there's our first entry point for our trade. Yes, that was very nice. Quick 2.5 points on the trade without even like blinking an eye. Somebody suggested how you scale in. I said a point above and below, half a point above and below. So half a point above and below is 30.5 and 30. And that was a nice little quick jolt off of the off of our 30.5 area there. So how do you enter a trade? Yeah, I just said that you scale in around the level. So we had 30.5 in there, 30, 29.5. We bounced down to 30.5 and rotated quickly back up there, and we take our profits. We took out 2.5, 3 points on the trade. If you held on to them, it happened very quick, but it did happen if you were watching. And then, like I said, once you take the trade and make money on a trade, we don't. We usually cancel the rest of it. So if we're not always going to get the 30 exactly, that's why we scale in. And that's why we made a nice, even if we scaled in a point above and below, you did all right on the 31. It popped up to 33 really fast. So again, just a matter of how you enter your trades. And then once you make money on the level, it becomes a lot more risky to trade. So consequently, we don't. It's a one-time shot here for our levels usually initially, and then we worry about the price action that occurs. All we're trying to do is have we have a game plan here, and we kind of let the market dictate what our game plan is going to be and how we're going to trade it, and kind of let the market just do its thing. We don't believe that markets go straight up or straight down. So at the 30 level, we had the price that got triggered, and we were able to take advantage of it on the rotation. All right, Don, you got your wish really quick. No, we don't have any signal bars. We're not going to say green for go and red for stop. Everybody's different. I keep trying to mention that over and over again, that the opportunities here are based on individuals' risk tolerance. We try to help you understand what the market is going to do, and then after that, we let you decide, what trades you're going to take, understand why you're going to take the trades, and also understand the risk. So we had a buying opportunity there against the 30.5. It bounced right to it and came right back up at a 30 area. It's not just one level, it's an area. And then the market continues to downtick here. Next level of support that we have is down at 21. And that's what we're trying to just take advantage of ebbs and flows of the market. So and each individual trader has their own risk tolerance. Consequently, we individualize our program here, our methodology, to individuals who are interested and also who want to take the course and understand, what the market is doing. I try to explain about why markets are bouncing off of these levels and to give you the opportunity to make some money. So I don't have signals, I don't have bars, I don't have lines. We do have our blue band. We do have a couple bands that we use to help us, but we don't rely on them. We don't rely on our levels. We trade our levels, we trade our bands, and we do whatever the market suggests or wants us to suggest. We just never know what the market is going to do every day. We don't know the volatility is going to come into an area a day. We don't know when it's going to pick up. We don't know anything. All we can do is trade what the market gives us. Again, the goal here is for you to become an independent trader, right? That's the goal, to take the information the market's giving you every day and trade around it, see what's going on, understand the technicals, that's the signals that the market gives us, and then have the ability to understand what those signals mean and trade the opportunities that the market gives us. Sometimes it gives us a lot, sometimes it doesn't give us so much. So again, feel free to ask any questions. I don't mind questions whatsoever. I want you to understand what we're doing here, and I appreciate what we're trying to do. And if that makes sense to you and you understand and you want to learn something different, especially, there's a lot of people who come in here who've traded and they just do different. There are a lot of people out there, but we're just a little trading room here that gets together every day trading S&Ps. Sometimes we are trading we hit everything in the morning perfectly. Sometimes we have to work on these trades. The market swiftly comes back down here to our 21 area. Again, just keep your stop in, right? We don't know what's going to happen with these markets. All we can do is trade them. We don't know. Sometimes the levels get swallowed up like this one does, and then we just have to take your stop and proceed accordingly. And then look for the next opportunity. Can somebody repeat the levels or print the levels again for us? There they are in the chat box area. All right. Well, this little trade here, we have to work here just a little bit. And hopefully, if you hung in there with it just a touch there, you were able to maybe scratch it or take a little bit more out of it. It's got a nice little rotation here off of, obviously, it went down to 18 and then popped back up here. All right. All right, so that hopefully worked out. Wasn't as clear cut as the last one, but you had to take a little bit of heat on it, and then you did get paid off on it very quickly. Everybody makes adjustments to their trading right? It's you have to understand the risk involved, and then yeah. Oh, good, very nice there, Robert. Nice trade for you. All right, nice little rotation here. Of course, I had to get dip down to the 18 first and then pop back up, which is fine. Hopefully you were able to stay with it. And again, maybe scaled in a little bit differently because we did dip quickly down there. Robert, I'm impressed. You're taking profits. That's pretty impressive for you. I'm impressed. Isn't it better to take some profits? I mean, how many times you tell me you got a nice trade, you get in a nice level, and then all of a sudden I got stopped out after you had 3 or 4 points on it. You told me that a few times, by the way. Now you're telling me you're taking profits. That's good. I'm impressed. All right, nice rotation there off of that little 21 area there. Me, like I said, got down to 18. Look, we're not perfect here. It's not. We do have secondary levels underneath or above our levels, so we do understand that there's a little slippage, and it's how you trade around that slippage that makes the ability here to either get out or scale in and take advantage of that little dip down and rotation back up. All right. All right. Well, I'm glad. I'm glad you're learning. Took you a little bit of time, but you're getting there. Is Brad the whisperer, by the way? Because I don't know. I don't think I'm the whisperer. I've never been called a whisperer, but I've been called many names before, but not the whisperer. That's just too nice of a name. All right. We do have a number coming out here in about a minute. So hopefully you're flat and we don't are. Yeah, hopefully you're flat and you can tell here by looking at the ladder ticket, by the way. Now look how light it is. There's no 100 lots anywhere up and down the ladder ticket. There's like 20 and 30 lots. So you know that if you don't know that there's a number, but you see the ladder ticket lighten up like it has right now, where there's no 100 lots anywhere up and down the ladder ticket, right? You know that something's going to be coming out soon. And we do have a number coming out here momentarily. So that's another way of being able to tell whether there's something that's happening to the market, because usually at least you have a few hundred lots up and down the price ladder ticket. And so when it lightens up the low, when they lighten up the load like this, that means something's up. That's always an indicator for you to know that there's a number to be released or momentarily be released. As you can get to the little choppy right now. It's kind of a big number. And we'll see what it wants to do here. We don't like the trade numbers. We don't like that positions. Whoa, there it is. 29. Seems, I guess it's a little bit bearish. It is a little bit bearish. And you can see it's a little bit choppy here. Again, it's hard a lot of trades that are going on that you can't even see because it's happening so fast, right? So instead of trying for us to get involved with these algos that are whipping around the market, just be patient and wait. We are not that good to know what this is going to do. I hate to tell you, nobody is. Not any independent trader. No, you're not. You just got to let the market kind of do its thing. When it settles down, see what those areas are that it created and then trade around them. That's all you can do. I mean, we are just not fast enough to be able to. I've learned that. One time I had when it was, well, anyway, one time it was trading really crazy. I had like a 12 point profit on a trade, and before I could even like try to get out of it, I ended up losing 10 points. And believe me, I was trying to get out of it. Unless it happened like just like that. Just as soon just like that. So what I mean, we can't compete with these algos that are in there, you know. So instead of trying to compete with them, just let them hiccup, and then we'll trade after it's done. Yeah, how do you like that? How do you think I was feeling? Right, had a 12-point trade, a profit on a trade, and then all of a sudden I'm taking a 10-point loss on it. Just like as quickly as I'm telling you the story, that's how fast it happened. So I've learned many a time there's not worth it's not worth it to trade when it gets like this. So I mean, when there's a number, and this week, in addition to all these other numbers that are coming out this week, it's unemployment on Friday. So that's always going to be an interesting market indicator. We'll see how those numbers turn out. Numbers are going down across the country. Maybe the vaccine is working, at least initially. Seems like, even though not enough people have gotten it, but yeah, we have plenty of snow here in Chicago. We haven't had a snowfall like this in years that came over the weekend. It's been years since we had a good flickering of snow where your mound comes up to your hip as you try to shove the snow off of your driveway, and then there's no place to put it, so it just keeps building up, and it's been a while since it's come up to my hips that the snow pile is right there. Well, it might be getting another chance there, Don. Can't blame the blue band this time. You like my snowblower lawnmower? Yeah, so do I. Trust me. That stuff was bad. Phew. Now I remember why I bought that thing. If the market comes back to 30 or to 21, can I buy again or wait? Again, the market is those levels that we have are good the first time to them, right? And so they become a little bit more risky. Right now, the support level would not be at 21. The support level would be back around 19 or 20. Anything below 15, you want to be out of any longs. So once the market created a new level because of the price action, the 21 isn't a level. On the upside here, 30 would not. Well, you have to look at the price action to tell you if you want to sell it up here. But right now, this is still an afterflow of the level. There's a little bit of resistance right here at 31, but again, only if you're aggressive. And I would keep a tight stop if you're going to take this this little sale here. Anything above 32 out of any shorts. Yeah, I would not. I wouldn't touch it here right now either. Again, you're still in the afterflow of the number, so this is still reacting to the number. So I would definitely be a little bit careful here about trading. I'd just give it 5 minutes for it to absorb the number, and then decide what you want to do. I would say there's some good resistance around the 40 area, which is our pivot. If we're looking to do anything, that would be around there that I would look. But that would be it. In the middle here, I would look at support. On the downside would be 14, and on the upside resistance would be a 40. In the middle here, you got to let the market kind of do its thing. You'd be guessing here as to what trade to put on. It could easily continue to rally, or it could go back down to the low. I have no idea. I don't profess to know. I don't know. I don't know what the market's going to do. All I can do is trade what the market's telling me to trade, find my resistance and support areas and trade them accordingly when they get there. Otherwise, in the middle here, I'll stay out of trouble. Yeah, Don has got a problem with the 1 minute chart. It's trading too quickly for him. Getting too many opportunities to trade with the 1 minute chart. I keep telling you, get off that chart. You at least hit 3 minutes there, Don, if you're going to. Take the 1 minute chart off I mean, I know you like to trade, but you are ample opportunities. Ooh, getting a little, couldn't rally it there. And so somebody put a big order and I'm going to sell it. So what happens here when you get these little, gaps like it is, somebody wanted to sell like a 500 lot, right? So they put the 500 lot below the market and they take everything out above that was bid until they fill the 500. And that's how you get filled on 500 lot. And that's why you have these little gaps in the market that they were trading at 32. Then you're all the way back down to, 29 in a second. Because somebody needed to sell a big lumber, and you created that little gap, and so that's sometimes also how you don't get filled at the price you wanted to trade. So, all right, we did have a couple reasons there. You have to be very aggressive to take that 32 area there, which was our blue band in an hourly. If you were looking at that, there was also a green band there was at 30. You had to be extra aggressive there to take that level, but it did pay off for you. All right, good job there, Don. You can come here and help me snowball my driveway. All right. Again, if you're very aggressive, it also matched up with our blue band and our hourly there. If you were going to take that trade, so it kind of lined up there, just kind of inched up above above our green band there in our 5 minute. But it did have backup there against the blue band and hourly. So sometimes we like to match up with different opportunities, different things that we look at. Anybody have any questions, please feel free to chat them, write them down in the chat box area. Be more than happy to answer them. Some of you folks who've joined in Friday and you kind of are trying to understand what's going on, just if you don't, just ask a question. Happy to answer them for you if I could. And again, you got to remember that I'm not calling out trades, but I am, right? I mean, I'm telling you where to support and resistance, and then it's up to you to kind of try to understand the risk and then trade according to your risk tolerance. All right, we'll quickly, swiftly come off of that 32 area there. Again, if you were a little aggressive, maybe you took it. Don, did you still take that trade now on this downside move? And you did all right. Just had to go up first before it came back down. That's the case, right? The market is there to give you pain first before it gives you the opportunity to make your money. Just what it does. Oh, nice. Right. So that's what the market does. It has to put you through some pain first, and then pay you off. If you hadn't noticed, that's usually the case. Nothing is easy. The only way it would be easy is if we had tomorrow's paper today, and I would share with you all that information in that paper. Actually, it's not even a newspaper anymore. It's tomorrow's news app. I can't even say that anymore. It ages me to say that there's a newspaper out there. You used to get the newspaper and have all the prints of the ranges of the futures markets, right? And so you take that information and you could, if tomorrow, if you just had what the range was, right? That's all you needed. And you could just go nuts. But we don't know that, right? We don't have tomorrow's paper today. So we have to trade what the market gives us. Sometimes it's a little bit easier to read, sometimes it's not. Either way, you're here every day, so you're going to have opportunities no matter what. Is it possible to make $1 million out of 10,000? So anything's possible. You got to be right all the time. It's possible. Sure. If you can handle the opportunity, and if you can handle the pressure, and you can handle and you can be, you know, right? Yeah. I mean, why not? I'm not telling you everybody's there going to do it, but I'm just telling you it's doable. You don't have a time frame, right? For sure, you can make sure. Um, in the S&Ps minis, why not? I mean, this is one of the most liquid markets that you're ever going to trade. Not only is the most liquid market, it's also the most. It's technically friendly, gives you the opportunity. And as long as you have liquidity, you could trade it. I mean, do you think that Forex is the only place you have liquidity? Right, but I think it's more skewed to banks and stuff like that. So the banks know what they're going to do with that, with the Forex contract before you do. By the time you figure it out, they're taking their profits. Here, it's like everybody, the opportunity is there for everyone. There's not one. I don't think you can't. There's a lot of players here. That's why. So, oh, Don, come on. Don's the only person that tells me he made money on a trade and tells me he got out too soon. It's the only person that tells me that. You can never go broke taking profits, right? Let me ask you a question. Can you make $1 million in the euro and the Forex with $10,000? Right. You tried, but you always lost. Yeah, it's tough. It's tough. Futures trading is tough. But I just think that the Forex is also, like I said, it's a much tougher trade than the S&Ps. I mean, everybody likes to trade it because there's a lot of movement and volatility, but there's a lot of movement and volatility here too. So, uh, you know, it is what it is. This is all we try to do is make money here on an everyday basis. Um, that's what we're trying to do. We're not trying to make $1 million. We're not trying to make 100 grand. We're just trying to make money. How much money you make is all dependent on you as an individual trader. I mean, uh, persons who are trading 1 lots and 2 lots, persons who are trading 10 lots, whatever, 20 lots, whatever it is, you have to understand the risk. I try to explain the risk to you, and then the rest is up to you. Well, it depends on volatility. We're scalping, so we're waiting for those opportunities. We have plenty of different setups that occur. So as far as how many trades you want to take, it's all dependent on you. But we're trying to get 3-4 points on our trades. If you bought the if you bought this 21 and then if you got in again and scaled in down at 18, you were able to take 4 or 5 points easily on the trade. Not a problem. And I wouldn't, Robert, it's a little bit more risky right now. It was a short a little while ago. It's working again, but this is the 3rd time up here. I'd be a little bit careful. Or if you're going to take it, just have a tight stop. So again, it all depends on market volatility, market movements. We are scalping. So right now, yeah, I got short right up there against that the 32 area. Again, it's a matter of me explaining the risk, and then each trader understands the risk and understands the exit strategy, and then trades according to what they feel they're comfortable with. All right, now we're flat. We got nothing on, and this is like the no trade zone over here. Kind of gets range bound a little bit, so we'll see what happens. No, I'm not. No, I don't. Again, our goal here is not for you to follow my trades. It's for you to do your own. That is the goal. So what I do is totally irrelevant. I hope you understand that. This is not what I do. We have a methodology, and I show you the methodology, and I explain to you all the methodology that I show you, I do. The fact that you don't take my trades or I don't take your trades, that's nothing wrong. You could trade trades that I don't trade. Or maybe I'm done for the day and I don't want to trade anymore. Doesn't mean that you have to stop trading. There's this like thing about having to know what your trades are. This is not what we're talking about here. You have to understand, we are trying to let you see the market and what I see, and then implement some of the trades that you recognize, visualize, and then take advantage of them because of your reasons, not because of mine or somebody else's. I keep saying that over and over again. It's like this thing about coming into this room and knowing what I do or somebody else does or another person. There's nothing to do with that. This is about you. Let's see here. Traders appear to be getting more clarity on trades that will be allowed this week after uncertainty over the transactions led to market's worst week since October. Robinhood has limited stock restrictions on 8 companies. Users can still only buy 1 share of GameStop, while Interactive Brokers reopened trading in options for the volatile Reddit name. Flows that were also pulled from brokerages last week due to angst over trading over restricted trading may also be coming back into the market, and futures are reflecting the renowned optimism. So yesterday, the last Friday's sell-off over the last couple of days was maybe related to GameStop, is what they're saying. As the market continues to uptick here, a little resistance if you're a little aggressive around the 40 area. This week's events may have turned the markets on their heads, but fear indicators imply that we may have seen the worst of the grossing. We believe, while we believe that there is more pain to come, we remain optimistic that it is likely to be remain localized. Stimulus is re-entering the discussion, giving another boost to equities as President Biden meets with Republican lawmakers today to discuss proposals. Another week of earnings is meanwhile on tap, while with Thursday set to be the busiest day of the season. 99 S&P 500 companies are set to report, including Google, Amazon, Alibaba, Ford, Snap, Exxon, Pfizer, and UPS. There's also a bevy of economic data ending with the January jobs report that will be published on Friday. So we got a busy week this week. So good week for us to be patient, wait for the opportunities, take advantage of what the market's given you, and go from there, right? Every day is a little different. Alternative COVID relief package. A group of 10 Republicans led by Susan Collins of Maine is pitching a new coronavirus relief plan with a $600 price tag, less than a third of the size Biden administration's $1.9 trillion proposal. $600 billion, it should say. The GOP said that their plan is more targeted, offering smaller paychecks to fewer Americans and stripping out the measures that would have raised the minimum wage, but includes additional unemployment benefits extensions. These people think about the minimum wage. It's $7.25 for the last 20 years. What is the problem? I don't think you can go and find a job right now that's paying you $7.25. It's just insane. I don't understand it. All right. Again, we have resistance, a little resistance around the 40 area. The low offer increases the likelihood that Democrats will seek to bypass Republicans to fund their proposal that could further weigh on the further cooperation between the two sides. A similar scenario was seen in 2020 when both parties were trillions of dollars apart for months, but only came together just before the Senate runoff election in Georgia. Biden has said that the aid package is his top legislative priority and indicating that he would pass it without bipartisan support if needed. As the market is chopping up here a little bit. Got a little resistance around the 40 area. And nobody wants to work. And you think that's why? Biden will meet with Republican senators at the White House this afternoon to discuss the alternative proposal, but also needs to get his party on board for the 1.9 trillion stimulus package. Democrats have a narrow majority in the Senate, with Vice President Harris casting a tie-breaking vote, meaning that Biden will require support of deficit hawk Democrats from conservative states like West Virginia, Joe's Manchin, and Montana's John Tester. So that obviously is a big market opportunity there for us to try to get this thing passed, and probably market will be happy about that. GameStop squeeze. The commission is closely, if it's from the SEC, is closely monitoring and evaluating the extreme price volatility of certain stock trading prices over the past several days to protect investors and to maintain fair, orderly, and efficient markets, and to facilitate capital formation. The Commission is working closely with our regulating partners to ensure that regulated entities upholding their obligations to protect investors and to identify and pursue potential wrongdoings. The Commission will closely review actions taken by regulated entities and many disadvantaged investors or otherwise unduly inhibited their ability to trade certain securities. Again, they had to shut down that Robinhood thing because they just needed to get some money. They were open-ended on risk, and the SEC does have capital requirements for all these brokerage houses, and they obviously, because of a one-sided trade and everybody was doing the same thing, did not have the right capital requirements to be able to maintain what that was maintained. They actually had to go borrow $700 million, and that's why they couldn't do it right away, and that's why they shut people down. Again, this happens with every exchange, and I said this the other day here, is that they had to do what they had to do only because there are regulations from the exchanges as to how much money a firm can have, so be able to handle the risk of the clients. It happens here on the floor of the exchange. They do it to every trader. They do it to every firm. It's not a new thing. Well, yeah, they had to get a line of credit from the bank for $700 million. That's what they had to do. They had to secure it. It was getting that lopsided. No, I'm not short at 38. I had 40 as resistance. However, I did buy the dip back down here to the 32 area, which was that earlier resistance area. Again, it's not what about me. It's what you guys are doing. Again, if you did buy them on that rotation back down to that earlier resistance, you're getting paid off here. All right, like I said, we had resistance up there at the 40 area. That's where I got short, and you're taking a nice little rotation here off of that level. You got a nice quick 2 points on that trade. Again, this is where you have to wait for the opportunity there. Again, I think I told somebody just asked me before, when I shorted 38, I said, no, I got a resistance at 40. Okay, so we took resistance at 40, got up a little bit above 40, and then came back down to 38, 37 and change. Hopefully you were able to take advantage of that little trade. Somebody wanted to know what trade I made. There it is. Told you about it. Took the trade. Hopefully, again, in the middle there, when it was trading around the between 25 and 32 there was a little tough area, could have easily gone down, but once we got above it, came back down, you could have bought the 32 area if you were a little aggressive, and then either held on to 40 or just sold the 40 and made a nice rotation off of that. Either way, those are two opportunities there in the last 10 minutes that we did not have prior to the market trading. This is completely a price action opportunity. Okay. So there's a difference here. There's the levels, and then there's price action opportunities that the market creates for us via the trading. And that's what we try to look at. And that's what we try to teach. You got to try to find these opportunities on your own. And that's what we're trying to do here. So again, if any of this stuff interests you, we teach this stuff. This is what we do. We're trading room here because I started this trading room because I got bored up in my office just watching these numbers click away. I came from the floor where I interacted with people standing around me. Sometimes there were a lot of people standing around me. Sometimes there wasn't. Sometimes I interacted with people across the pit when I was telling them that they were crazy and they didn't know what they were doing. And they traded with me and they thought they didn't. Yelled at them. That's okay. Happens to the best of us. But you know, but then so I came upstairs to the office when we started trading, the stuff on the computer, and it just bored the crap out of me. I mean, just completely. I just was like, there's no noise here. And really, at least I get some interaction with some of you. So some of you like to write, some of you share some of your trades you're with me. Some of you ask me, some of our traders who've taken our education course asked me about what trades. Obviously, at that point, I could share some information with you. And I do when they put them in the chat box area. That's why I started this trading room. So, yeah, yes, it was a nice little trade there, off at a 40 level. I'm glad you were listening. I'm glad you were listening. Somebody was listening. It's good to get feedback too. You know, this is very tough for me just to talk. Sometimes I get good feedback, which is great. There you go. Probably you paid the $100, right? Probably the best $100 you ever spent, right? Paid for it. Paid for the whole year. Thanks, Don, for reminding me. Don tells me that I moved from my office down to the floor. And then I moved, then I was on the floor, down to my basement. I'm on a downward spiral. Thanks, Don. Can I get lower in my basement? Is that what you're asking me? Can I get in a complete dungeon? Well, I don't know. And Mark reminds me that I'm not trading from the beach either. How's that? Not trading from the beach. All right there, Robert. Nice trade. Nice trade for you. See you. Good way to take profits. See, you're out of here early when you take profits. Isn't that the right thing to do? Again, like I said earlier, we'd focus more on the morning hours for us to do most of our trades. So for first 2-3 hours of the day, that's when we have a bulk of our trades. Sometimes we get a lot of trades in that time frame. Sometimes we don't get that many trades. Today we've had a few. Honestly, that's a lot for us. Friday also we had a few. Whoever raised their hand, just ask a question in the chat box area. You don't have to raise your hand. You can just type it in the chat box area. If you put it to panelist, only I and Brad see it, so you're good. Don't worry about asking any question you want. You don't have to raise your hand around here. Could you imagine that if I was trading on the floor on the pit and then all of a sudden I wanted to say something, I raised my hand before I said it. Oh my God. But I know this is what Zoom does. This is not a classroom, it's a trading room, so it's totally different. Let me tell you, the first day I got on the floor in the pit, you know, you're totally green. You're scared out of your wits because you have no idea what's going on, and people are yelling and screaming around you, right? Literally. You walk in the pit and they're like, and they start swearing at me because I was standing in the wrong spot. It's like, what? Well, where am I supposed to stand? They're all yelling at me, swearing at me, and I'm like, I'm literally stepped into the pit. Obviously went in the wrong spot because I knew someone, and she brought me up there, and she tried to help me, and I was obviously not supposed to be where I was supposed to be, and instead of them telling me nicely where I'm supposed to be, they flowered me with a lot of expletives and said, "Get the F out of here." It's like, oh, great. Like, you guys are really nice. I can't imagine that happening if you went and worked at a job, and first day on the job, they welcome you. They say, "Hey, this is your cubicle, your office, whatever." They're nice to you. First minute of my job, I get sweared at. Tell me I have no idea what to get the F out of here. That's exactly what happened. Anyway, you don't forget that day. It happened a long time ago. Don't forget it. All right, we're kind of drifting around here. Again, that 32 area kind of holding. And you can see why. Again, if you're anything below 30, 29, let's say, you're out of any longs. Yeah, I don't know. Believe me, I felt like crying, but I wasn't going to take my bag or my backpack and go home. That's for sure. I did feel like crying, but hey, 20 some years later, we're talking to you now. How am I doing? Resistance right now, next level of resistance that I have is up at we pretty much looking at 51 really. That's not really the next good area of resistance. It's not THE, it's DA, as in the Bears. You ever see that skit when the Bears won that was a long time ago, but it's the DA. This is how you pronounce it in Chicago. That's right. Not THE. Come on. Get with it. You're talking to a Chicago guy here. You don't talk that way. Get with it. All right. Again, we are range bound here below 29 out of any longs. If you're going to take any longs down there, I mean, you don't buy them up here and get short and get out below 29. That's not how you do it. You buy them. If you're going to buy them, you buy them when it dips down. If you think it's going to go up, that's fine. You had a couple opportunities down there to buy the 32 area. But now, if it continues to go up, the next resistance level would be up at the 51 area. All right, Brad, if you want to come on in now, you can come on in now.
Hey, a couple quick programming notes. Right now it's 10:45 a.m. on Monday. It is 2/1/2021. That's a big number. Wanted to welcome all the individuals that are coming in as participants and part of Sal's Monthly. Thank you. Also, a quick shout out to those that have joined Sal in his mentoring and his coursework. Sal's got some great prices running now based on his mentoring and his coursework. If you're coming in and you're new and you want to really focus on your ability to make money via your trading platform and you're interested in working with Saul by coming into the service on a daily basis, I can send you out an opportunity via chat in the chat feature. If you are interested, raise your hand in becoming a regular here on a daily basis. If you're already signed up, that's great. We appreciate it. Thank you. Raise your hand if you are interested in becoming a regular to be able to come and go as you please. Get the help you need based on setting up your system to focus on the S&P 500 E-mini. Receive Sol's proprietary scalping levels on a daily basis. And then look to be part of Sol's commentary in and around those levels. So look for the hand raise feature in Zoom and raise your hand. If you're coming in from the outside, click on the link and join us live in Zoom. Hey, Linda K, you're part of Sol's monthly, right? Just let me know back. Hey, Anupam, Berger, Dan C. Dan, did you you made it on Friday, right? Just let me know back in chat. Dan W, just let me know back in chat. Hey, Don. Hey, Ian. So, Dan, what's your decision? I'm watching the clock. You got 5 seconds. Fur R, just let us know. Hey, Frank. Well, you know what I'll do is I'll send you out a special link, Linda, and you can take care of that now. I mean, I try to be here every day because it's my job. And we do try to accommodate people that come and go. And we appreciate you coming and going. Why don't we take care of that now, Linda, so I don't have to worry about you? Hey, Dan, I'm going to send it out to you so I don't have to worry about you, Dan C. If I don't see it go through in the next, I don't know, by the time I look, then I'm just going to have to exit you and then ban you. I don't want to do that, but I think we've had enough. And I don't want Saul to yell at me. Hey, Scott J. I think you're just coming in for the first time. I'll send out the information to you so you can understand what the opportunity is. I'm going to send it out to you now. Ron B, how are you? Hey, Robert, Peter O, Nicola. Nicola, send it out to you too. Lynn G. Lynn, let me know. Hey, Joel, KG, Kurt. Hey, Glenn. What a nice group in here. We've got people that, individuals, friends that have been in here for a long time, and we appreciate it. And you wouldn't be here, I know, if you weren't getting something out of it. Start with Saul's levels. Those are worth their weight in, maybe it's silver today based on the silver action. And his commentary is sought after. And his commentary in and around his trades are, well, you can tell me. Saul does not like to tout his own horn. So if anybody needs me to send him out the link, raise your hand. We had a few people do it, so that's great. I'm going to look in the background to see how we're doing, to make sure that you're signed up properly and that everything's okay on the back end. And for those that are on the fence, let's get it done so that Saul doesn't whip me after the day. Thank you for the response. Got a couple people that crossed over from indecision to action. Good job. So Sal's going to be popping in and out. If you're new to trading and you need some assistance and you want to get set up right, let us know. Be glad to help you. If you are, if you're part of Sal's Monthly, be glad to do that. If you need trading software, let us know. We'll be glad to help you with that. If you need better trading software, let us know. We'll be glad to help you with that. And again, the focus here is on the S&P 500 E-mini, and you see the charts. You see the series of 3 charts in a separate chart window. That's the focus. That's the layout. It's very simplified because it's the levels. Oh, that's great. I'll make sure that you're set up on the back end. Thank you for signing up. Hey, Dan, was that you that just came through? Dan C? Or was it Dan W? Fur R. What are you thinking, Fur? Linda, let me know if you're good. That's great. So let me know when it's done, okay? And let me know if you're not going to do it. How's that? Let's do what we did the other day, which was that you were going to have it done by the end of the day. Let's do that one. So let's have a refresh of your interest. Okay, Linda, so we're not going to see you again? That's a shame. I was looking forward to working with you. Okay. So why don't we do this? The next time you come in, then I'll send you that special link. How's that? Then we'll get it done for you. You got it. And Dan, let me know what we're doing. Are you in or are you out? All right now it's coming up on 11 a.m. Eastern time. I've done my reach out. I've asked if anybody needs any help. Don't hesitate to ask. We're here for you. You know, if you're going to come in and out, remember that you still need to sign up. And it looks like everybody has the link. If you don't, we had a number of people raise their hand and they fulfilled. And Dancy, I'm just waiting for your high sign. I can't leave. Saul said I can't leave until you're in, till you're done. I got to do like a marathon of talking until you're in. So that's between now and 11 a.m. my time, which is 5 minutes, 4 minutes. So in New York, we have a lot of snow coming down. It is chilly out. I did leave a window open last night, but I had the fan in and the fan was going out. And it's funny, it's in the office and it has all the tech near that window. So I thought I was coming into a real problem, but the fan held out. Probably got a half of, well, no. It's hard to tell because it's blowing around pretty good, but it's got to be at least 6 inches, maybe a half a foot. Linda, you're more than welcome to come back. Just make sure we do the right thing when you come back, and we'll try to do the right thing by you. 10:57, 3 minutes. I got to keep going until Dan comes into the family. Dan C. You know, they say the window opens, or is it a door closes and the window open? The window has opened. Hey, everybody's they're all Dan, you've got a support group. You've got individuals, traders that have been here for a long time saying, "Go Dan, go Dan, do it." It's 10:57. Boy, I had Dan close the other day. He committed. I think it's just his finger is on the switch. You got a lot of people rallying to you, Dan. They want you to be successful. They want you to be on the inside, baby. The inside. 10:58. Has he made it? Dan, give us the word. Dan, give us the word. I'm going to play some Il Divo. Yes. Yes, come on, Dan. You got to send it to attendees, panelists and attendees, so he sees it. We're bringing him into the fold. Anybody else want to join? There you go. Anybody else want to get in on the action? El Divo. That was Il Divo for Dan coming into our service. Thank you, everybody, for giving him a vote of confidence and support in him joining us. It was beautiful. Of course, I had to get through that before my wife came in and said, "What the hell is going on in there?" We'll try to give you a rendition of something on a daily basis as we move people from guests into our family. So Saul will be popping in and out. Right now it's 11:03 on Monday, February 1st, 2021. Everything we do is for educational purposes only. Nothing is to be taken as direct trading advice. This is the Trade Doctor in the house. Saul Shul is your host and mentor. You didn't know I had a face for radio, did you? Well, that's not true. You may, but you really shouldn't. You're trading between you and your broker at your own risk. Trading is a opportunity in the zone of the trading doctor. Sign up and become part of the family. Take that short trip from being a guest into the comfort zone of price action trading and Saul's levels. Now, Fur, I believe you did sign up for Saul's. You transitioned from a guest. You transitioned from a guest across the line into the trade zone of the doctor of trading distress. Brad has left the building and the doctor has arrived. And Dan, see, I appreciate you and welcome you into the family. Again, if you like what we're doing here, tell your friends that the doctor of trading distress is available around 10 a.m. Eastern Time. Actually, around 10:30 a.m. Eastern Time for about 20 minutes until Saul comes back in and puts the doc to rest. Right now, we're on a little longer. And Steve suggests I take a pill. But Steve, I think I have taken that pill. As a doctor of trading distress, I can prescribe all sorts of interesting medications as I move through the trading zone.
I think
Uh-oh.
what Dan is trying to, Steve is trying to tell you is, all right, shut up.
I told you he was going to come up. He was
I
going to
mean,
come in. He was going to
there's
whack the
only
doctor.
so much I can listen to this stuff. Wow, what the hell are you doing? What did you take this morning?
I am just here to add guidance into the trade zone.
Guidance.
Yes, I bring people over into
Mm.
Saul's world.
Oh God, I feel sorry for you guys. Sorry I let this go on as long as I did. I'm sorry.
Well, we'll be on tomorrow at 10:30. The
Okay.
doctor will be back, and I will guide people to the
Oh
light.
my God. Help.
So be ready.
This is what I got to deal with. Oh my God. Wow.
And again,
Oh,
raise your hand if you want the information on coming to the light, and I will send it out to you directly in chat. Thank you. Come to the
that.
light.
Oh,
Come to the
I can't even.
light.
I'm gonna.
Come to the light.
I want to just. I can't even mute him. Okay. Uh, I'm really sorry. I really am. Okay. You can see here it's getting extremely choppy. We drifted down to 25, which could have been a bit of a buy area. Then it got a little. Once it got through, they kind of faked everybody out on the upside there, and they couldn't rally it anymore. So the shorts came. The longs started bailing out, and you had a little push down to the 25 area. What you're seeing basically is a little range trade here, where both sides of our blue band kind of not really getting too much of any significant move one way or the other. Resistance would be up at the 51. Well, we had support down at 32. We said below 29. So if you did buy them, you got out below the 29. That's fine. If you got short there at 29, we did dip down to the 25. Again, depending on how you um, absorb what I say. If you don't want to be long above below 29, maybe it's a short opportunity for some of us. That's how we get some momentum trades based on the price action. If you did take that trade, it did dip down to the 25 area. Hopefully, if you did take it, you took a little bit of took some profits. And now basically we're just rotating back up here. This is what I call the no trade zone. As the late afternoon slips around here a little bit. Oh yeah, yeah. If we enter, yeah, I mean, it doesn't. A bear market only gives us good opportunities. I've said this many a time, is that traders like markets that are going down. You got a lot more volatility. The VIX goes up higher. When the VIX trades small or low, it becomes, trades in the low 20s, high teens, not good trade for us. Usually what happens when the markets are rallying, they tend to, the volatility gets taken out of the market. Don't know why. But when markets go down, the volatility definitely increases, and we love that trade. It gives us many more opportunities to trade. It is definitely because markets, when they go to the downside, they go down quicker, so you could get in faster if you find a good spot, but they also rotate off of levels very nicely. And because people are out there with the concept of wanting to be long most of the time, you get some good rotations back up to the upside off of certain levels. So no, markets, if we enter a bear market, bear markets are really good for traders. And I think, I don't know why, but most traders like bear markets over bull markets for whatever reason. Oh yeah, we love volatility. Yeah, volatility is our game here. That's what we strive for. That's what all traders want, is volatility. We have no problem with volatility. We adjust our trading to volatility. Actually, we we talk about 2 to 3 point trades when the markets are somewhat calm and normal. When volatility comes in there, we extend our stops a little bit so that we can take that into consideration, because there's a lot more slippage around certain levels. So maybe instead of 2 to 3 points, you're looking at maybe 4 to 5, 6 point stops with the same amount of profit potential, and we do get them. back in March last year when things were absolutely crazy, we had 10-point stops on our trades with a 10-point profit target, and we were getting them. We were getting stopped out of some trades, but that's okay. We were getting 100-point S&P moves. 60-point S&P moves in an hour. It was crazy. The markets were going nuts, and we loved it. I think a lot of our traders enjoyed that market for us. Yeah, this is definitely a good place to be if you want to learn. It's a little bit different than stocks, because stocks you buy and hold, and I don't know what your capital requirements are, or how much stocks you're trading on an intraday basis or not, but it's a little different than stocks. You get a lot more leverage here for the amount of money that you put in, because the markets move differently than stocks do. You don't have to put your margin here. I mean, your money that you have to put up to trade in one contract is a lot less, and your money's not tied up. So yeah, definitely good opportunity if you're an ex stock trader to come and trade futures. It's a different ball game. It's obviously a place where I'd like to be versus. I mean, I own stocks, and that I buy and hold, and I'm looking for long term thing. But that's not that's not what this not this is not what this is. This is trying to eke out money every day to pay some bills. Right. That's what we're trying to do here. So, and again, there are times to trade, and then there are times not to trade. We're getting into this no trade zone area where we're going both sides of our blue band, both sides into the later. We focus more on the morning hours for first 2-3 hours of the day. Gives us good bang for our money. If you do have other businesses or anything like that, we do have a lot of people who have other businesses who trade the morning with us and kind of go do their thing in the afternoon. That's what we do here as well. We trade the more at the morning hours. We get some good opportunity. It doesn't mean that we don't trade all day. If you wanted to, I guess you could, but the trade in the afternoon gets a little bit more sticky or complex, or the ebbs and flows are not there like we expect them to. There's more opportunity during the first few hours of the morning than there are in the late afternoon. The late afternoon trade gets a little bit more one-sided, especially the last hour. The last hour, we definitely, I try to tell most folks if we're trading, not to trade that last hour trade. It gets kind of does its own thing on it for no reason. And you're getting a lot more flattening of positions in those hours and in that last hour. So you get more volatility really for no reason, no rhyme or reason. It just kind of just bounces around. But again, it's definitely a place to be if you're looking for a different way to trade. All right. So again, I would love to be here all day, but when the market gets like this, where it's really not moving around that much or doing anything, I'm here in the background. Sometimes I'm obviously talking to some other clients. Sometimes I'm teaching a class. If we do have our education course, it's in this venue. We use live charts, and it's usually done in the late afternoon, and we kind of get everybody who's part of the course in our class, and we kind of do the live charts and kind of show them off our live charts instead of using charts that I can make up to prove our case. Much easier to teach off of live charts than it is to have perfect situations lined up in some kind of book that I put out. But yeah, that's what we do here. So we do have let's see, Peter, are you in? Are you still here? We'll do a class later this afternoon, around 12 o'clock Chicago time. Is that all right with you? Okay, fantastic. Chad, he's not here. So again, we do our class in this venue. So right around 12 o'clock, I ask people to exit, and they're more than welcome to come back tomorrow or in an hour's time. I don't know if you still need the charts that are up here, but we use our live charts to kind of teach what we try to do here and explain things quietly, interactively, zoomishly. I guess Zoom. It's not a bad thing. Zoomishly. Okay, we're just kind of hanging up here. Support around seems to be holding our blue band, maybe a little bit bullish here, just a little. Get above maybe 45. We'll try to run up to the 51 area, but nothing. I mean, the problem with this trade in this afternoon trade is that there's not that much follow through. That's the problem. There's not, a lot of people have already made some of their money. Hopefully, some of you have as well here with us, and you feel good, and you're, the trade kind of slows down. It's not that good, so there's really no reason to, really trade this afternoon trade anymore, especially if it's slow. So, Maureen, if you want to join us later, you're more than welcome to also. And anybody who's taken our course in the past is also, every time we have a class, you're always invited to sit in. Again, we're a little range bound, a little bit bullish, nothing to hold our, you're always welcome, Maureen. You don't have to ask. Some of it might be repetitive for you, but you definitely don't have to ask. All right, so it seems like we're trying to be a little bit bullish here, looking for a push up to the 51 area, and anything above 45, maybe a little bit quicker move up there. Whatever. It's just like I said, the problem with this trade right now is just that they've sucked out some of the volatility, and so it becomes a little bit slower trade. I get back here in a bit. All right, we were trying to keep you along here, looking up here to the 51 area. We said it's definitely a little bit of a buy there above 45, looking for 51. Hopefully you were staying long, or if you got long, or if you didn't get long, maybe you got short at 51 and look, and you got a little rotation here off of our 51 resistance. Multiple ways of trading this little opportunity here. We were trying to keep you long, either looking for 51, maybe you got short at 51, you got a nice rotation off of it. Maybe you bought them above 45. Again, we told you this about 10-15 minutes ago that we're looking for a push above 45. We were trying to keep them long there, looking for a push up to 51. If you didn't get long and just traded to 51, then maybe you got short at 51 and made a nice rotation off of the 51. Multiple ways of trading the last 5 minutes against our level here at 51. Hopefully, some way, one way, you were able to take advantage of this little opportunity we present, or the market actually presented, not so much that I presented, but the market presented for us. Again, if you have any questions, feel free to ask about how we came up with this, but it's just price action, and the price action dictated our ability to stay long the level, and or a reason to stay long, and then give us a reason to trade the level here. And, hopefully, one way or the other, whether it be you got short there or you got long going up to it, you were able to take advantage of it. Now, the next level on the upside we have is up at 60. And you can obviously, if you were trying to stay long, kind of stay long there. Anything below the 45, you'd be out of any longs if you're trying to stay long and have a trailing stop. All right, Tim. Good job. Nice couple trades there, right? I had a good morning, I think. Good job. Again, we're keeping you long here, looking for the uh, 61 area or 60 area, and we got a nice rotation off of that level. So we were trying to keep you long. If not long, you definitely had a good opportunity to trade off at a 60 level as well. Either way, hopefully you were able to take advantage of that trade. All right, so hit our 60 level. Next level above is the 69 area. So nice little trades there. We could have stayed long without taking too much heat there whatsoever. So we never got below the 45. And now, if anything below 50, you want to be out of any longs.
Hey, a couple quick programming notes. Those that are joining us from the outside, join us on the inside. Look for the link. The link is, well, it's actually, you can just put in pitiq.tv, pitiq.tv, pitiq.tv. For those that are joining us in Zoom, if anybody wants to sign up for Sol's monthly, raise your hand and I'll send out the link to you. If anybody wants to find out more about trading platforms, let us know and we can turn you to the right direction. If anybody wants to step up from Sol's monthly into Sol's mentoring, let us know and we will have a private conversation about where you are in your trading, where you'd like to be, and the services that Sol provides beyond the monthly subscription. I'll be in the background. Don't hesitate to raise your hand. We've got a couple hands raised, so it's great. We appreciate it. Thank you.